Hello, hello. Hi, Bando. Hi, Baku. Hi, Jacob. Hi, Lily, Lewis, and hi, Rich. Hi, Muhammad, James. I do see. Morning. Good morning. Annie, NG. Hi, morning. Oh, my sites are moving. Okay, I do still see more people joining the webinar, so just give them a minute or two. We'll just give everyone a minute or two before we actually start the webinar. Welcome back. I see a lot of familiar names. Morning, Rich. Morning, Jacob. Jakub. And morning, Baku. Morning. I just want to find out where you guys are from, because you guys always wish me good morning, but it's already close to the evening here in Singapore. Yes, not morning for me. London, UK, Australia. No, Australia wouldn't be morning, right? Australia would be night. Like, I think it would be like 7 p.m. in Australia. Okay, we got London, London, London. Mostly London. Okay, that's great. And a few Australia, few from Singapore. Okay, basically everyone from everywhere. Okay, Lancaster. Nice. All right, I see the attendance thingy has stopped, so I think everyone who's joining today would have already joined already, so we're good to start. As usual, we will start the webinar with a disclaimer. Any opinion expressed in this presentation or any following slides are solely those of the presenter, me, of course, and not necessarily those of Vantage FX. So as I always tell you guys how Vantage always invites us to do their webinars, where we are totally a different company. We're just an external party. We do webinars. We specialize in research and we specialize in charting. Okay, so that's why whatever I say it's not necessarily Vantage's view, but I must say whatever we say is things that we use in our own trading and we use to grow our account. So trading on margin, trading Forex and CFDs carries significant risk, especially if you're trading on margin. It may not be suitable for all investors, so be cautious when you guys are trading. Just be very cautious. Yeah, let's start with our slides today. Okay, so today we're going to do Fibonacci expansion. I do see familiar names. Oh, Harena's not here today, or she has not joined yet. I see familiar names who were here last week. So before last week, we were doing Fibonacci extension. I'm going to be testing you guys as we go. Hi, Amina. Oh, welcome back. I'll be testing guys as you go, especially those who were here last week, to see if you guys still remember our Fibonacci series, part 1, part 2. So we're gonna do meeting the team, a recap of Fibonacci retracement and extension, and then Fibonacci confluence is for later, but I just put this up here so that you guys know what this 4-part series is about. Okay, so our first part was retracement, which we did 2 weeks ago, and then we did extension last week. We're doing expansion today, and we're doing projection next week. Okay, and then once we learn all 4 of this will be called a Fibonacci confluences. It's basically a confluence. I mean, if you Google the word confluence, it just means like lining up, or like it's just a confluence. So we'll be looking for Fibonacci confluences, and I will teach you guys how to do that after we finish the 4 basic parts of Fibonacci to begin with. Okay. A little introduction about us. We are Averse Fortune Group. We are an award-winning research team. We're the finalists for the technical analyst for 2019-2022. I always say I want to update this slide, but it's also 2021. So that's 3 years in a row for the best Forex and best equity research. We're a certified Singapore fintech company. We do appearances on radio, TV. We do it for brokerages, for investment banks, for hedge funds. We do a lot of research. So when it comes to charting and looking for setups and looking for probability, we're very good at that because we do a lot of back testing. Our entire job is just to research on the history of the markets. Okay, so our team comprises of Desmond. He's our CEO. My colleague here, Angelina, who is a fellow trader. She's a very, very good trader. There's me. I'm also an investment analyst here at Averse Fortune Group, just like Angelina, and another colleague here who I don't have a photo because she doesn't usually take you guys, so I didn't think it was important to leave her photo there. So I am a profitable trader, but for those who are always here every week, I'm sure you guys are tired of hearing this introduction, but this is more for the people who are here for the first time. Okay, so I'm a profitable trader. I'm managing close to $1 million now in my own personal account. I grew that from close to nothing. I passed FTMO twice. So for those who don't know about FTMO, it's basically a prop trading test that requires you to be profitable, where you make a profit of 10% in a month, but there's only like 22 trading days in the month because it's Monday to Friday. On the weekends it's closed, so you have to make 10%. I mean, I think personally that's not bad. 10% a month is not bad. If you have a 100,000 account, that's making 10,000 a month. So I think that's not too bad. I've passed that twice, and on a monthly basis, I do have about 10% returns a month. Well, 8 to 10%. Lately. I'm a bit more conservative now, but yeah. So my specialty is catching reversals using Fibonacci confluences, which is what we're covering right now. This is a very powerful tool actually to look for Fibonacci. Hey Elena, welcome back. And also using support and resistance, which is like supply and demand. Okay, that's that. Let's do a recap for those who were here 2 weeks in a row and here on the 3rd week. Kudos to you guys for being so consistent with this webinars. It's so important because I think trading is a journey, and especially the Fibonacci series, it's a journey. If you miss one part 1 or part 2 or part 3, any one of those parts, when we move on to Fibonacci confluence next week, it'll be very hard for you to understand what I'm trying to say because you didn't cover all the other 3 or one of the other 3. Because every time we do this, we will later go to the charts to try to identify those Fibonacci levels. That is very important. Being able to identify the patterns is super important. So let's do a first recap. Oh, what happened? Okay, I'm on slide 6. It immediately jumped to slide 10. Slide 7, 8, and 9 is supposed to be a Fibonacci. Give me a sec, guys. Just give me a sec. I don't know why. Okay, you know what? There's probably something wrong with the slides. Let me try to see. If I can get the slides to work. Okay, that's fine. It's totally fine if the slides are not working. Hi, Bundle. Welcome to our webinar. We'll just forget the slides. I'm gonna get rid of the slides. We're gonna go straight to the live charts. No, don't. I don't know what happened to slides. Okay, so sorry about that. Can you guys see the charts? If you guys can see the charts, please let me know so that I know you guys can see what I'm trying to say. Thank you so much, Rich. I mean, it's really funny if you can see the charts and I'm just charting and nobody actually knows what I'm charting. Thank you, Baku. Thank you, Amina. Okay, so let's do a recap. We need to do a recap. Let me grab my brush. Okay, we went through Fibonacci retracement. Okay, can you guys tell me how many levels are they in Fibonacci retracement, in a Fibonacci retracement? Okay, I've got one answer. I knew you were gonna be the one who answers. Rich. Oh wow, okay, thank you, Jacob. Jacob just went straight to the levels. Okay, Rich and Jacob is correct. So for Fibonacci retracement, you have 5 levels and they are 23.6. Okay, the 38.2, 50%, 78.6, and lastly is, oh, what's going on? Why am I missing one level? Oh, sorry, 61.8. There is no 100% Fibonacci projection, which we have not covered, but these are the 5 levels for retracement. Can you guys let me know if you see a Fibonacci retracement on the charts right now? Just on our current charts, do you even see a Fibonacci retracement? Can you guys let me know so that, please tell me what, tell me please what is in this detail. Hi, Mina. We're focusing on Fibonacci retracements right now and then extensions, and then we will be looking at our topic for today, which is expansion. Oh, okay. Yeah. If you are new, the recap will be perfect for you because the recap will just cover basically the 2 things that we talked about 2 weeks, last week and the week before. So right now we're covering Fibonacci retracement. Fibonacci retracement, you're not missing much. If you follow me from right now, you would be able to follow up. Okay, so Fibonacci retracement is a pattern that looks like a V, but this N is shorter than this first N, okay? So in theory, this is where the 100% is, and this is where the 0 is, okay? So Fibonacci retracement is when price moves within the 0 to 100, which I should be highlighting here. It is a level from a 0 to 100%. Okay, it cannot be above 100. It cannot be below 0. It is within the 0 to 100. So because it is within the 0 to 100, this is what it looks like. This is a Fibonacci retracement. You guys see it? This is what a Fibonacci retracement looks like. This is what a Fibonacci retracement looks like. This is what a Fibonacci retracement looks like. Okay, so Fibonacci retracements is just a pattern or a tool that you use to kind of forecast where you think price is going to retrace to, hence the name retracement. Retrace to before it continues with that direction that it's supposed to be going. Okay, so right now price is retracing right here. I mean, I would much prefer it if price didn't kind of do like this zigzag, so it kind of looks like an M. Like a better Fibonacci retracement is where it doesn't do an M, it just kind of looks like a V. So this is not the most perfect ideal one, but I think it's okay. Okay, so everyone is good with Fibonacci retracement. Let's go to the next one, which is Fibonacci extension. Can you guys let me know the details of Fibonacci extension? How many levels are there in the Fibonacci extension? Okay, thank you, Jacob. Rich? Okay, thank you, Muhammad. Yep. So there are 2 levels of Fibonacci extension. Can you guys let me know what the 2 levels are? We covered this last week, so you guys should be able to get me the answers. I mean, unless you're new here, and that's fine. You don't have to be giving the answers right now. You should just memorize. Okay, thank you so much, Rich. You got it. It's 127.2 and 161.8. So what you notice about the Fibonacci extension, it is an extension, hence it is a level above 100%. Okay, do you notice that these 2 levels are above 100%, whereas Fibonacci retracement, it is within 0 to 100. That's why it looks like a V with a shorter end. So because it is above 100%, it should look like this. It looks like a Nike tick, because this is where the 100% is, just like the retracement. This is 100%. This is where the 0 is. And above 100% means that it would have to look like a Fibonacci. It would need to look like a Nike tick for it to be a Fibonacci extension. Okay, so Rich was saying he sees a Fibonacci extension in the charts already. Anyone else sees a Fibonacci extension on this charts in this whole area? It is there. I see so many, actually. I see so many Fibonacci extensions. Other than Rich, anyone else sees a Fibonacci extension? Okay, I'm glad someone else sees it, because this is important. Your ability to be able to identify these patterns is very important. Okay, you need to train your eyes to be able to catch these patterns on the charts. Okay, so there's one right here. That's a Fibonacci extension. I know it looks different from this because this is inverse. So if it's inverse, means the 0 starts here and the 100 starts here. Okay, but ultimately it is still a Nike tick pattern. Okay, that means the back end is longer than the first end, and it's above the 100%. It extends way beyond the 100%. Okay, so this is a Fibonacci extension. This would be a Fibonacci extension. This would be a Fibonacci extension. This would be a Fibonacci extension, and this would be a Fibonacci extension. So a lot of times on the charts, you will be able to see the patterns happening over and over and over again, and that means you will be able to predict what price is going to do, because when price comes to one of those levels, the 127.2 or the 161.8, you will be expecting price to do that reversal. Okay. Okay, so today we're going to move on to our next topic, which is the Fibonacci expansion. Okay, so the Fibonacci expansion, what level do you guys think it would be? If we have one level that is above the 100%, one that is within the 0 to 100, what do you think the expansion would be? What do you think the expansion would be? Because we've already got one that's above 100 and one within 0 to 100. Okay, all right, Muhammad. All right, Rich, good guess. Actually, I see you putting minus, but yes, it's a good guess and it is the correct guess. Okay, so it will be any level below the 0%. Okay, any level below the 0%. There are two levels as well. The two levels are 27.2%, okay, and the other level one is 61.8%. Sorry, it is negative, it is minus, because it's below 0. Okay, so these are the only two levels that are negative or minus that we look at. Any other level beyond 0, below 0, we don't look at it. So these are the only two levels you need to focus on. Okay, the only difference with the Fibonacci expansion with the extension and the retracement is that the pattern is different. Okay, the pattern is very different. Because the level is below 0, the pattern looks like a zigzag. Okay, the pattern looks like a zigzag. So this is where 0 is, and this is where 100 is. And then you're kind of projecting where price will go beyond or below the 0. Okay, so it can be drawn a different way. It can be drawn this way as well. This is where the 100 is, and this is where the 0 is, and you're projecting where price will go below that 0%. Okay, so let's look for that pattern on the charts. Do you guys see it on the charts? I see it right now on the charts. Look for a zigzag pattern. A zigzag pattern is what you are looking for. It's not a V anymore. It is a zigzag, or it looks like an N. Okay, it looks like a cursive or like an italic N. Okay, so there's one right here. Do you guys see it? There's one right here. There would be one right here. There would be one right here. I mean, it happens constantly on the charts. Okay. There is a catch though with the Fibonacci extension. The Fibonacci expansion, sorry. When price does the pullback, that means when price goes down and does the retracement or the pullback, it needs to pull back to minimally 50% or half of it. So example, from here to here is 100 to 0, and you're looking for that zigzag pattern. It needs to minimally pull back to 50%, okay, and then continue with the movement, okay. So to measure if it has gone to the 50%, you take the fib retracement from the swing high, from the 100%, you pull it to the swing low, the 0%, and this is where the 50% is, right? And you can see that price went to the 50% and then it continued. So it needs to minimally pull back to the 50%. If it goes above the 50%, if it goes to the 61, the 78, that's fine as well, as long as it does not cross the 100%. Okay. So I'm gonna add in that pulls back minimally to the 50%, okay, and does not pull back beyond the 100%. Okay, did you guys catch that? Are you guys able to catch that? Is everyone good? All right, thank you. Okay, so when it does a pullback, it should pull back minimally to the 50%, but not beyond the 100%. Okay, this is not a expansion anymore. Okay. Okay, so let's just remove all of these levels. Let's remove all of this so that we can now try to plot the Fibonacci expansion. I wish there was an erasing tool somewhere. This is taking a while. Okay, okay, that's clean. Okay, now that we have identified our Fibonacci expansion, which is the zigzag kind of pattern or the N kind of pattern, now what we're gonna do is we're gonna plot using the Fibonacci retracement, the same one, Fibonacci retracement, okay? But instead, we're gonna take from the swing high to the swing low, okay? If it's an inverse Fibonacci expansion, we're gonna take from the swing low to the swing high, okay? So we're gonna take this tool, the Fibonacci retracement, from the swing high, the highest point that you can find. If you wanna be very accurate, you can use the magnetic tool here. It will kind of connect to the highest point and you pull it down to the lowest point of that zigzag, okay? Now you're gonna go to the settings. You're gonna get rid of everything. Get rid of everything. Okay, get rid of everything. And then now you're gonna plot that 2 negative level that we talked about. Negative 27.2, which is this, and negative 61.8. Okay, this is the default setting that we have set because we use this tool very often. But if you don't have these settings in your Fibonacci tool, you can just edit it. So just click on it and then you can just edit. See, you can erase it. You can erase it and put whatever number you want to put there. Okay, so you can put negative 0.272 and negative 0.618. Okay, so that's how it works. Okay, now we're gonna see where price is. So is price closer to the negative 27.2 or closer to the negative 61.8? Which level do you guys think is more relevant? Can you guys let me know in the chat box so I know you guys are still following with Fibonacci expansion? Okay, we've got some answers coming in. Thank you, Rich. Thank you, Elena. Thank you, Lily. Thank you, Amina. Thank you, Jacob. Okay, you do have a point, Elena. Okay, usually I would say that the Fibonacci, I mean, if we take horizontal ray. Let's just make it clearer so it's more defined. These levels are more defined. Okay, usually I would say the negative 27.2 is not relevant anymore because price has cut through it. Okay, price has broken through it, so it's not relevant anymore. But at this point, I think because price is kind of still hovering around this area, we will be using the 27.2. Okay, for those who pick 61.8, I do understand why you chose 61.8 because it looks like price already broke the 27.2 and it's not relevant, and the next level is here. But for now, we can just keep the 27.2 because it looks like price is rejecting. It looks like, look at that rejection. There's a lot of rejection going on. It looks like even though it did break a bit, it looks like the break is not significant. Okay. Okay, why I also don't want to get rid of the 27.2 is because earlier on, so I chose AUD/USD for a reason. Earlier on, I spotted Fibonacci confluence on this chart. Okay, so for this charts, we're going to use the 27.2, negative 27.2, and then we're going to bring in things that we learned from the 2 weeks before, from 2 weeks before and the week before, which is the Fibonacci retracement. Okay, there's a Fibonacci retracement here and the Fibonacci extension here. Okay, so now we're going to combine all three and see if it lines up here. Okay, so for the Fibonacci retracement, we're going to go from the swing low to the swing high, get rid of whatever levels it is, pull out our 5 important levels. Okay, do you guys see anything that lines up? Which level do you think is most relevant to current price? Can you guys let me know in the chat box so I know you guys are still following? You can remember what I said 2 weeks ago. Okay, thank you, Rich. Thank you, Jason. Thank you, Muhammad. Yes, so the most relevant level would be, thank you, Jacob, would be 78.6. So let's get rid of everything else. So now you can see that this is now an area. Do you see that this is now an area? Remember, I always say that support and so when you get a confluence, you get in an area of interest. Yes, the more things or the more levels lining up in the same area, it means it's a very significant area and it's a very significant key level. And that means when price gets here, price will have a hard time breaking through, right? Because there's so much resistance going on here. It needs to first break the Fibonacci expansion, break the Fibonacci retracement, break the Fibonacci extension before it can get to this part of the charts or this part of wherever it is going. So most of the time price would have a hard time breaking it and therefore it would bounce, okay? Because there's so much resistance here. Okay, so the Fibonacci retracement lines up here. Remember I was saying support and resistance is never one line. It is always a zone. Okay, so now it has become a zone because the Fibonacci, the 78.6 Fibonacci retracement lines up here. And now the negative 27.2 Fibonacci expansion lines up here as well. Okay, another thing that lines up there would be the Fibonacci extension. There is a Fibonacci extension right here. Right? Let's plot the Fibonacci extension and see if anything comes out. Let's get rid of everything and leave the 127.2 and 161.8. Okay, you can see from here, let's get rid of the 127.2 because it's too far away from price and it already broke. You can see now that there are 3 Fibonacci levels lining up here. Okay, so this is a very strong area of confluence and it's a very strong area of resistance. Price will most likely have a hard time breaking through. Yes, the more levels lining up in a certain area, the stronger that level is and the harder price will be able to break through. And that's how you catch reversals. So I like to catch, I was saying in my introduction, my specialty is catching reversals. So like from here, like most people would think it's just going to continue to go down. But for me, because of this Fibonacci level signing up, I kind of can predict or forecast that price is going to do the reversal here. Okay, by using all this Fibonacci confluence level or Fibonacci levels. Okay, I know today we're not gonna cover Fibonacci projection, but I just want to show you guys that there is also a Fibonacci projection level that lines up there as well. You guys wouldn't understand, that's okay. So Fibonacci projection is also a zigzag that requires 3 points. The retracement, extension, and expansion uses 2 points, but the projection uses 3 points, which we will talk about the next week. The 100% should line up nicely there. Yep. Yeah, for projection we use 100%. So now there's actually 4 Fibonacci levels lining up here. I think this is worth highlighting. I myself actually got in for a buy here. So if you guys want to, you guys can, but do it at your own risk, of course. Do it at your own risk. Okay, so not only does it line up nicely with the 4 Fibonacci levels, there's also some support here, a little bit of support here, which would line up nicely, a little bit of support here that would line up nicely, a little bit of support that would line up nicely. Basically like in this area, there's a lot of resistance or support going on in this area. Okay, so I would say this is a very good entry for a buy because of the Fibonacci confluence. And usually once I find a confluence, I would already think, oh wow, this is such a good entry. I would try to back it up with indicators. So if you entered buy there, where would you take profit using Fibonacci? Okay, yes, good one, Elena, good question. So using Fibonacci, you can then now predict where price is gonna go. When we predict, we always use a Fibonacci retracement first. Only when it reaches to only when it breaks the 78%, which should be somewhere here, that's when we predict using the Fibonacci extension. Okay, but for now, we will be predicting using the Fibonacci retracement, not predicting, but forecasting. Okay, Fibonacci retracement, let's come up with that 5 levels. Sorry, come up with the 5 levels and try to see if anything lines up close to those 5 levels. Okay, when I say anything lines up close, you want to find any swing low or any swing high or any support and resistance that lines up close to those 5 levels. Okay, so I'm gonna zoom in so that it's easier for you guys to catch those levels. Do you guys see any swing high or swing low or support or resistance lining up with any of the 5 levels? If you guys see it, can you guys let me know so that I know you are able to catch these levels as well? Okay, I've already got answers coming in. That is a good one. Another good one from Rich. Rich, you got a good level. Another good one from Jacob. Another one from Elena. Another one from Elena. Yes, I would say all those levels that you guys pointed out are significant. We can all safely say that nothing lines up with a 23.6. Oh, actually, there is something that lines up here. Okay, so this is a 23.6. If we pull it back, it cuts through. There would have been a level here, but I don't really like it very much because of how this level cuts through so much of price structure. So I'm gonna say this is not a significant level. Okay, why we need to identify significant levels is because the question now that we have found our entry, we need to now ask ourselves, now I get in here, where do I get out? Okay, do you only want to play it to here? You don't, right? You want to project it as far as you can, but to project it, you need to know if when price reaches this level, is it going to do a reversal or is it going to break through and try the next level? Okay, so at this point of time, I think we can all safely agree that 23.6 is not a significant level. Let's get rid of that. Okay, 38.2. Rich said 38.2. This is a good level. We place the horizontal ray here. We pull it back. There are actually a few things lining up here. You can see that there is actually one swing low here and another swing low here. So I would say this is a significant level. So I am expecting price to come here and then may or may not reverse or break through. Okay, so the thing is, you don't know if it's going to reverse or break through. What a lot of traders do, or what I myself do, is that when price does come here, I put it as my take profit one. I take profit, some of my profit, because from here I don't know if it's going to break through or if it's going to reverse, because it is a level of interest, right? Okay, Elena is saying 50%. Let's see what lines up with the 50%. The 50% also lines up with this swing low here, right? This swing low. 61.8% by Jacob. 61.8% also lines up with this swing low here. And yeah, nobody said 78.6, but I actually do see a level at the 78.6, which is right here. Okay, so honestly, if you ask me, I think the most significant level would be the 38.2 because there are a bit more things lining up here. There are two things versus the 50% and 61.8% and the 78.6%. There's only one swing low or swing high. So before price can even reach the 50% or the 61.8 or the 78.6, it needs to be able to break this 38.2. And you don't know if price will be able to break that or not. Maybe price reaches here and it'll be like, this is too weak. I'm gonna break it and go to the next one. It'll come here and feel like, it's too weak. I'm going to the next one. Okay, but we don't know that. So that's why a lot of times my take profit would just be here. I always play very small moves because I think conservatively, at a very conservative level, at least it will reach 38.2. It might reach the 50%. It might reach the 78%. It might even do a Fibonacci extension and go to the 127%. But on a minimal, on a very conservative basis, I think it will at least reach the 38.2, and then whatever it does from here, we don't know. Okay, but it will reach the 38.2 and then we'll see what price decides. If it reaches the 38.2 and you see some reversal signals, that means it wants to reverse. If you don't see a reversal signal, you see a continuation signal, a continuation candle, it means it wants to continue to the 50%. When it reaches the 50%, if you see another continuation candle, it means it wants to continue to the 61.8%. Okay, so that's how I find my entries and that's how I find my exit plans. Okay, Rich is asking, if price action is strong, do you ever leave it to the next level? If price action is strong, a lot of time well, my trading style is I don't, because like I want to secure my profit as soon as possible. My trading style is that I like to get stopped out, or I like to take profit as soon as possible. So I'm a day trader. A lot of times, especially on the 4 hours, if I try to play it too far up, my trade may not close by today. Okay, so I always try to catch the next level, just the next level, so that I can get out from the trade today. Usually it takes looking on this, it took 3 candles to get to this point. Most likely it's going to get 3 candles to come up to this point. 3 candles on a 4-hour chart. 1 candle is 4 hours. That means 3 times 4 is 12 hours. It's going to take 12 hours to get just to the 38.2. Okay, so usually I don't try to aim further than that, but you can, based on price action, of course. Okay, so that's one chart that we went through using Fibonacci confluence or using Fibonacci retracement, expansion, and extension. Where would you put your stop loss? Okay, right now we have identified that this is a strong zone, right? So if it is a strong zone, that means that I do not expect it to break this zone even. It might wick, but I don't expect it to break the zone. So usually what I do, I just put my stop loss slightly below the zone. Not too near, because price may just come, wick you out, and then like actually end up going to the correct direction. So I just put it slightly below, like with enough breathing space, like just slightly below it, and like just hope that price just reverses from here. Like price just comes in and just reverse already without coming to do this and reverse. Okay, so that's where I would put my stop loss. I'm actually in this trade right now, and this is actually my layout. Actually, for my take profit, I didn't put it at the 38.2. I put it at the 50%. Yeah. But now that I'm looking at the charts again, I might just move it to the 38.2. But I think the 50%, if you look at it, 38.2 has more things lining up at it. Let's pull back a little to see. Yep, 38.2 has more things. If I pull this, it will line up here as well. It will line up. now we have three things lining up. With the 50%, let's see if I pull it. No, it just cuts through everything, so it's not very nice. Structurally, it's not very nice. I think the 38.2% would be a possible area price retraces to and then comes back. Might be a possible area, but there also might be a possibility it'll just go up and come back. Okay, so minimally I'll just play it to that level. That's one chart we went through. Do you guys have any requests on pairs or instruments you want me to look at using Fibonacci expansion or extension or retracement? If you do, you guys can leave it in the chat box. In the meantime, okay, we've got some already from Lily and Baku and Muhammad. Okay, Muhammad and Baku's one is the same, GBPJBY. GBPJPY, British yen. Oh, someone has been drawing on this. Let's remove everything. Okay, one look. Do you guys see the Fibonacci retracement? Yes or no? It has to be relevant to current price, okay? I mean, if there was a Fibonacci retracement in the past, it's not really relevant anymore. We need to project where price is going now. Okay, so yes, Rich sees it, Baku sees it. Do you guys see any Fibonacci extension? I do see the retracement. There's one retracement here. There's another bigger retracement here. Oh, okay. Actually, Rich, you see the Fibonacci expansion? I don't see a Fibonacci expansion actually. Not expansion, extension. The Nike tick. Does anyone see the Nike tick? I actually don't. Smaller one near current price. Oh, okay, this tiny one. Okay, I do see it. I think it's not very significant. Like you want a more obvious one, but I mean, we can try to project that later to see if anything lines up there anyways. The better one is where it has a very clear move, if this was much clearer. This one is like, I see it, like now that you mention it, it could be valid. Okay, first things first, let's project. Wait, sorry, before I continue, does anyone see the Fibonacci expansion that I do not see? Does anyone see the Fibonacci expansion? It's okay to share your answers. If you guys see it and I don't see it, totally fine, just let me know, because that's the thing about trading. It's being able to catch patterns, being able to catch things. So I might see something you might not see, and you might see something I might not see. I'll give you an example. I did a webinar and someone spotted an inverse teacup that I don't even use. But then when a person said, I see an inverse teacup, I'm just like, where? What inverse teacup? And then I'm like, oh, right, there is an inverse teacup. So if you guys see a Fibonacci expansion, let me know. I don't see it. Expansion has to be a zigzag, right? Remember we saying the zigzag cannot cross the 100%. This is where the 100% is. It needs to look like this, not like this. Okay. So I don't see the zigzag anywhere. Even this would have crossed the 100% already, right? It would have crossed the 100%. This is where the 100% is. Okay, so we'll just all safely agree that there's only a Fibonacci retracement here. There's two retracement, a big one and a smaller one. Okay, and then there might be a Fibonacci extension here. We'll see if anything lines up. Okay, so with the big one, from the swing high, we pull to the swing low and see if anything lines up close to price, the 50%. Okay, so there should be 5 levels, but I only have 15 minutes left, so let's not waste time. The 50%. Okay, let's see with the smaller one if anything lines up. This smaller one here, it should be the 78.6 if anything. Yep, the 78.6 lines up there. Okay, now there is the Fibonacci extension. Actually, there should be something. There should be 161.8. Okay, let's. Oh no. Okay. Nope. 161.8 is here. It has crossed 161.8. We don't do anything. We don't do the 200. We only use these two levels, so the Fibonacci extension is no longer valid because price has cut through it. Okay, so right now there's two Fibonacci retracement lining up here. I would much prefer if there were more things lining up, so I could like safely call for a sell here. I'll just say, yep, it's a sell here. There's too many things lining up, but right now there's only two Fibonacci retracement. On top of that, if I pull this area further and further, nothing lines up. Nothing lines up here. Okay, there is no swing low or swing high or nothing at all that is a significant level that lines up here. Okay, so that means I can, just based on this alone, I can safely predict, or my forecast would be that price is going to break this area and go to the next area. Okay, the next area would be the Fibonacci, because we did the 50%. Let's see where the 61.8 is. Okay, 61.8 is way up there. 61.8 has more things lining up with it. Okay, and this one would be the 78.6 would be the highest level. It could possibly go for an extension, retracement. So this won't be relevant anymore. We might have to find a Fibonacci extension for this. Let's see if anything lines up with the extension. Nope, it's too far away. It's too far away from where we think price is gonna go. There's just nothing lining up here. So because we got a good example with the AUD USD, it doesn't mean it happens all the time, and it doesn't matter if it doesn't happen. Move on. There's so many charts left. So if anything, where do I think GBP JPY is gonna go? Because there are no levels here or nothing at all that's indicating it's gonna go down. It doesn't kind of indicate that price is gonna drop from here, because there's no reason for it to reject here, right? So my forecast is that it is gonna break and continue to go up. It's gonna go up to at least the 61.8%, because 61.8% is like there are more things lining up in this area, right? Let's just put an area here. There's more things lining up in this area. So if anything, I'm more biased that price will minimally come up to the 61.8 if before it does a turn, a reverse. I don't think the 50% was it. So do you only enter if there are several Fibonacci steps on the chart? Yes. Rodi, sorry if I'm pronouncing your name wrong. Rodi, yes, I do only get in when there's a lot of Fibonacci levels signing up, because the thing about trading is just finding very probable trades. The more levels signing up in a single area, it just gives you more confidence and more probability that it's gonna do a reversal there. You wouldn't want to like let me think of an example. Let's say you're going swimming in a pool and person A tells you that, hey, that inside that pool it's acid, and another person B tells you that no, it's not, it's just water. Person C tells you no, it's not, it's just water. Okay, so out of 10 people, only one tells you that it's acid and 9 tells you that it is water. So you're gonna jump into the pool, because based on probability and based on the information you have gathered, there's more evidence or more people agreeing that it is water, so you can safely jump into the pool. But if it's only one person saying that it's acid, you might be like, okay, this person is crazy, his information may be incorrect. Okay, so when I take a trade, I only take trades when there are more levels or more things telling me that, yep, you're good for a sell from here. And how do you find that? That's when you add in indicators as well. Look, there's so many indicators. There's more than 100 indicators to use, and a lot of indicators will tell you, yep, you're good for the sell from here as well. That's why the topical is where we cover Fibonacci, and then we start covering indicators. We start covering trading psychology. Next week we're gonna do the last part of Fibonacci confluence, and then after that, the week after that, we're gonna do trading psychology. The week after that, we're gonna start with indicators. So we're gonna learn Ichimoku cloud, for those who don't know how to use it, moving average, RSI, stochastics, Bollinger Band. We're going to do that week by week by week. So the more times you guys join these webinars, the more things you will be able to learn and cover. Unless you guys already learned it somewhere else, then that's fine too. Okay, so that's that. Let's look for the other charts that Lily requested, GBPUSD. If I'm not mistaken, there's also a good setup for NZDUSD. So I'm going to quickly do GBPUSD. On the get-go, I straight away see a Fibonacci extension. I see an expansion. I don't see a retracement. It's definitely no retracement there. Okay, I see an extension. Nope, nope, not valid. Okay, I see an extension on the smaller level, which is here, this tiny one. Okay, there's a tiny extension here. Probably won't be valid, but let's just try it out anyway. Sometimes the naked eye tricks you. Okay, the 161.8, not the best. It kind of broke through a little already. Not the best, but we'll just leave that there for now. Furthermore, that's 161 is the furthest we can go anyways. Okay, let's see if there's an expansion here. Expansion is the two negative levels. Nope. Okay, so if price has already broke all the possible levels, you can safely say that price is on its way to wherever it's going, and I don't want to try to get in anymore because it's already on its way. We'll just totally ignore this chart. Next, it's okay. You don't have to force this. If you don't find a setup, just leave it. So, please, ma'am, can you tell me how I start ABC trade F? Sorry, I don't, what do you mean by trade F? Start ABC. Okay, once you're figuring that out, I'm just going to continue with NZDUSD. Okay, NZDUSD was the same as AUDUSD because Australia and New Zealand, they're quite correlated. Okay, so again, you'll be able to catch a retracement, right? And extension, right? The zigzag expansion. So there's gonna be some kind of confluence somewhere here. So let's try to see the confluence. Let's start with the expansion, which is today's topic. The negative levels, okay, I'm gonna leave the 61.8 because it already broke the 27.2, right? Oh, beginning of learning trade first step. Okay, Amina, because you're joining us quite late in our webinar series, I've been taking the webinars for Vantage for a while now. If you want to go back to the basics, what I can recommend is you email Vantage to ask them for the webinars or the videos from the past webinars so that you can try to follow up things that you missed. So we've already covered things like support resistance. We've already covered things like supply and demand, support resistance, trend line, channels. We've already covered a lot of those. But if you continue to join us, we a few weeks ago, we did agree as a group to do the whole thing again, to do the entire basics again, which is support resistance, trend line, and whatever not that we have covered. Okay, so what I can recommend is just keep joining webinars. One day we are bound to cover, go back to the basics again as a refresher. Okay, so right now only the 61.8 is possible. Let's see if there is a, oh, sorry, I was gonna do a projection. I forgot that we have not learned projection. That's for next week. Fibonacci extension. Extension is the two levels below the 161, below 100. Nope, extension is not valid because price has cut through. Okay, or if anything, we can bring back the negative 27. Okay, nope, not a good idea. Not a good idea. Okay, extension, nope. What else did we catch? So we got expansion, extension, and a retracement. The retracement isn't the most beautiful one because I would much prefer it if it looks like that, but right now it kind of looks like this. Kind of looks like an M kind of pattern. I would prefer if it looks like a V, but we can just try to see if anything lines up there. Okay, I'm assuming the 78.6, yep, it lines up in that area. Now let's plot that area to see. Pull it back, it should line up with this swing high. It did line up with this swing high, and this swing high. Okay, so this little area lines up with a few things. Okay, so there's two Fibonacci confluences here. There's two which lines up nicely with this three swing high. I know it's not the best because it cut through structure a few times. Okay, another thing why I thought this was going to be a good trade is because of the ascending trend line. So that's where you combine Fibonacci confluence, with trend lines, you combine it with indicator, and that's how you get your most probable trades. Okay, the more things telling you that it is a buy or sell, the more chances you have of winning and the more chances you have of growing your account. Again, trading is just probability. It's just your ability to collect data and then make an informed decision of where you think price is going based on the data you have collected. So the data we have collected right now is that there is an ascending trend line, okay, which lines up nicely. It lines up so beautifully with the negative 61.8 expansion. It also lines up with the 78.6 retracement, and it also lines up with this 3 swing high. Not the best because it broke structure, but it still lines up there. I would say this is, if I were to rate this, I would say this is an average buy, an average entry for buy. I'm not as confident as the AUD-USD. AUD-USD, I would say I was like 80% confident because of the 4 levels lining up there. With this one, maybe 70% because this horizontal, this swing high, it cuts through structure. And there's only 2 Fibonacci levels here. So I would be like, maybe like 70-75% confident that this is a buy. If I were to buy this here, this is the entry for the buy where the Fibonacci levels are at. I would play it minimally. What is your setup, AUD? Hey, Harena. No worries. No worries, Harena. Oh, I was just saying Harena's not here today. I literally said in the beginning of the webinar, Harena's not here today. Okay, just give me a sec, Harena. It's a buy for AUD-USD. Okay, we'll just cover this NZD. I only have 2 minutes. For Vantage, they cut me off on the dot on the hour. Okay, so if anything, I'll play it to the 50% because the 50% is where this lines up nicely. It lines up nicely with here and kind of in this area of this swing high as well. Okay, so I will play it to this 50%. Back to the AUD-USD because Harena is running late today. Yep, Harena, I would enter here because of the 4 Fibonacci and play it to the 38.2%. Okay, so this is AUD-USD. I'm gonna get cut off in 2 minutes because the hour would have ended. Yep, I would play it to here. Okay, remember guys, the setups, whenever you find setups and you get it wrong, I just want to say that it's okay because when you find setups using a system and using high probability to find the setups, if you get it wrong, it's fine because you already tried your best using Fibonacci, you use trend lines, you use, oh yeah, there's also a trend line here. Sorry, I'm just seeing this now. You're using trend lines, using indicators, and all of those things are telling you the same thing. Like everything right now is telling me it's a buy, and end up it's a breakout, end up it breaks out and it's a sell. That's fine, that's totally fine because at least I already did my due diligence. I use all the I use the indicators, I use the trend lines, I use the Fib levels, and they all told me the same thing and I still get it wrong. That's totally fine. Okay, because out of 10 times using a system, I can assure you 70% of the time you're going to get it right because you're using a system. So yep, this is what I got. Right now, the trend line is lining up nicely with this area. This is the one that's entry. The other one is NZDUSD. Okay, that's my alarm to remind me not to overtalk because I always overtalk and then I get cut off. Okay, so thanks guys. Thanks guys. I will catch you guys next week. Sorry, not next week. The next session is on Thursday, same time, same place Thursday. We're gonna do live analysis. Live analysis are for people who already know the basics. So that live analysis, we're gonna look for setups. When we look for setups, you won't be lost because that's the live session and you already know the basics of indicators. You already know Fibonacci, you already know retracements, whatever it is, you know everything already, and you will be able to follow when I look for setups on Thursday. So I'll see you guys on Thursday. And then for those who don't want to join Thursday because it's a bit more advanced, you guys can do Monday, which is news. We're going to do fundamentals. We're going to go through the news together, going to go through our sentiments on what's happening in the world and how it's affecting the markets and certain pairs. And then on Tuesday, we're going to do Fibonacci the last Fibonacci series, which is Fibonacci projection and then Fibonacci confluence. Okay, so thank you so much. Thank you, Rich. Thank you, Alessandro. Thank you, her, and I've thank you, Bando, Amina, Jacob, Phillips, Lewis. I'll see you guys. Thank you, Baku. I'll see you guys again on Thursday if you are coming for the live session. Okay, bye.